What's going on, everybody? So just a quick USD breakdown for you guys, and what led me to this trade idea. So last week we had NFP, and pre-NFP we had Euro USD rise up to a daily key level, where we got a slight retracement, and what they did was they manufactured in price what some people believe to be head and shoulders here. So they were basically this was the trap move of Friday. They gave a little consolidation to start the week off. It dipped back down in price. And here we have a 1 hour price block. So a price block is basically the last up or down candle before a major move. So in this terms, this price block would be the last bearish candle here before this major up move. It's an institutional standpoint or institutional stamp in price. So we also had a market imbalance created here, a buy side market imbalance. So between this point here and this point here, there was only buy side liquidity injected into the market. So as an institutional trader, we know that the market runs on an algorithm, and the algorithm doesn't usually allow voids or imbalances like this to stay open. They're not necessarily filled every single time right away. They can be used as breakaway gaps and left open. But we basically had a little head and shoulders pattern above this to induce retail traders to the downside. They were thinking that this was the top of Euro USD, but we had analyzed the dollar already, and we had come to the conclusion that the dollar will continue bearish, and it's actually at our key level as of now at 96.11. So we have the 1 hour price block here, and in the price block there's a very key area where you take your fib from the open to the close, not the wicks of the actual candle, and you measure out the 50% here. As you see, I have a trend line here as well already. So I had a bullish bias on Euro USD, and I was just waiting. I knew there would be some type of manipulation to the downside, and if they were going to manipulate to the downside, where would be the key level of looking for a re-entry to the upside in Euro USD? Well, this 50% of this price block here is the key level that we're looking for, and our OTE fib levels are between the 71 and the 786. Those are heavily discounted prices for re-entry. So how do I get the 71 to 78 levels here? So from the previous swing low to the most recent swing high. So the swing low here, they swung price down, so it's a swing low here. So you draw your fib from the bottom to the top of the swing high here, and anything under the 50 is discounted price. And we wait for our kill zone hours. So for London, this is the London pair, this is Euro USD. We wait between 2 and 5 a.m. is our kill zone hour. So that's the time where we usually look for entry on Euro USD, GBP USD, because these are London-based pairs. These are when the pairs move. A good trade usually will happen in these hours. These are your optimal trade entry times between 2 and 5 a.m. for London. And these are your OTE fib levels of price, 71 to 786. And we also had a market imbalance closure with a price block here, all coinciding with one another. So we have our OTE fib levels from the swing low here to the swing high, which is our 71 to 786. We have our London kill zone hour, so this candle activated my buy limits at 4 a.m. So that falls in between our 2 and 5 a.m. kill zone for this London pair. At an institutional price point is where I actually had my limit order at the 50% mean threshold of this 1 hour price block, where you can expect some type of rejection. You will usually see some type of wick past the 50%. They'll usually get in there and grab a little more liquidity. But they also could have rejected directly off the top of this price block. So I actually have 2 orders that are in the market right now as we speak that were buy limits. So I put one at the premium end of this price block, which was at the open here, was exactly where my first limit order went. And then my other limit order was into somewhat of the discount of the price block at the 50% directly. And that's where I got put in as well. My stop loss from here was, let me zoom out a little bit, was 30 pips. 30 pips from the most premium entry point on this price block. And we got into drawdown about 11 pips. Now from my discounted at the 50% here was only 11 pips. So 11 pips and then about 26 pips on the premium end. I apologize for that. So my first entry at the buy limit was in 26 pips of drawdown, and the overall stop loss on that was 44 pips. So what I actually did was I knew the position size. Every trader should have a plan, and every trader should have their position size that they know they're going to go into the market with, and stick to the trading plan. So with me having 2 orders, I basically broke them in half. So I had half my position sitting here and half my position sitting here. So the drawdown wasn't that much on the first order. And then when my second order got put in is when I had my full position into the market, and it didn't take long for me to get right back into profit. It was just about 15 minutes. I was in a little drawdown, and then right after they put me right into profit. I'm currently sitting 105 pips in profit on 2 orders on my limit order. So those were limit orders where people will swear that market price is random, and if price was so random, there was no way with accuracy that you would be able to put yourself in position to where you only had 25 pips max of drawdown on a limit order. And the only reason it was 25 pips, I'd say, is because I tried to make sure I got put in on both entries. You'll see a lot of the times that they don't always have to trade into the price block. They can wick directly off this, or they can hit right off the top of the price block and reject it. So that's why I got myself in at the higher end here as well. But other than that, the second limit order was 11 pips of drawdown, and on the hourly it closed with the wick entry hourly. So it wasn't long before I was out of the red. The drawdown wasn't insane, and that was just based off limit order that I had already in the market Sunday, Monday. When Sunday, Monday markets opened, I analyzed EU, and I had a strong idea based on the dollar that we would get a rejection into this price block to see higher prices. So that was a small breakdown on Euro USD. I'll have a few more for you guys coming soon.